Hello friends. Friends, the market, much like the previous few weeks, were in a relatively range bound movements. Nifty was in a 300 point movement, whereas the Bank Nifty was roughly in a 1000 point movement. Despite the sharp sell off that we saw the previous week, which kind of indicated that we might be going into a downside, we had kept our bullish stance intact and we were bullish on the markets as long as it held on to certain levels. That paid off reasonably well. If you had taken that advice and continued your bullish stand or taken a buy on dips stance, you would have made decent profits. The butterfly strategy that we gave, you lost money there because the market went against what we thought the expiry would be. But the shares that we recommended, the Nifty that we spoke about, the Bank Nifty that we spoke about, they played out very well. Our theme played out very well there. What is it that can happen next week? What are the markets telling us? Where are the trend going to be? What is going to be the impact of the markets on the various events that are coming up? What is going to be your option strategy? What are the shares which are looking good to us in the charts? Come, let's see all this in the video. So friends, like what I was saying earlier, the Nifty was in a 300 point range throughout the week, from 11,144 low to 11,460 high. That's roughly 315 odd points. But it finally closed the week at 11,371, which is up about 1.7%. Bank Nifty similarly, as it's been doing for last many weeks, was in a 1,000 point range, 21,400 to 22,400, but it finally closed up almost 3% at 22,300. The action seems to be shifting to mid cap and small caps. Both of them outperformed the broader markets, the Nifty and the Bank Nifty. The mid cap was up by 3.8% and the small cap was up a huge 5%. In fact, more than 5%. The VIX was down 7% to just below 20 levels, which is one of the lowest in the last many months. And this indicates that there probably is not going to be any volatile movement in the immediate short term. What will drive the markets next week and the event the week after? As far as results go, almost all the results are out and there are no major results which could actually impact the overall markets. But the one event which everyone is waiting for is the AGR judgment. The hearing has been going on for the last few weeks and the market looks forward to a judgment almost every day, but that doesn't seem to be coming. The hearings go on. Next week also there are hearings, so the judgment is expected anytime. And when that comes, we could have a sharp movement, especially in the telecom companies like Idea, Bharti Airtel and Reliance, and also in the banks who have lent to these telecom companies. That is one event which we need to watch out for. It's probably not reflecting in the VIX because the time is not certain. When it could happen is not certain. That's why it's not reflecting the VIX. We've also been generally following the global markets. If global markets close high, we go up, and if they go down, we go down. That's been happening for quite some time now. What we need to remember is that the US markets are almost at highs, whereas we are still a distance away from the highs, which could mean again that we could be a little more bullish. We have some more distance to go. The data that's come out of the US is not very encouraging in terms of the unemployment data, but that is triggering a stimulus hope that the second round, the stimulus can come, and that is what is possibly keeping the markets buoyant. There has generally been good news on the COVID vaccine front. It's progressing pretty well. Russia last week announced vaccination. China has made very giant steps in it. India also is progressing well. So overall, COVID vaccine has been showing a positive momentum. Some major changes are going to happen in the capital markets as announced by SEBI. And the changes are going to be two major changes. One is the settlement, the cash settlement, which is T plus 2 now, could move to T plus 1. India will be one of the few major markets where a T plus 1 settlement happens. SEBI has also made it compulsory that shares for margin have to be pledged and unpledged by the client themselves using OTP. This will go a far way in cleansing the system in terms of making it more transparent and more safe for investors. IRDA data has been coming out and it's indicating very strong health insurance numbers, which basically means that the health insurance market is picking up quite well. In fact, it's now comparable favorably to the vehicle insurance market. So insurance companies seem to be emerging as winners, and insurance companies could be bought as medium to long term investments. There has also been a lot of talk on PSU banks privatization. So you can see that a lot of PSU banks have been seeing action. Banks like UCO Bank, they have been seeing action, and that is expected to continue. In the past, about 1.2 crore Kisan cards have been distributed, and it's expected that over 1 lakh crores of credit will flow to rural India. Imagine what this money could do to the rural economy. This money will be spent on fertilizers, on seeds, on tractors, and on things related to agriculture and consumption. So all companies which are related to rural India could benefit from this and could be good investments. Another good news is for the chemical industry. It's expected that under the Atmanirbhar slogan that Prime Minister Modi has given, import duty on a few chemicals would either be hiked or maybe even they could be banned. Imports could be banned for a few chemicals, which would be positive for the chemical industry as a whole. And if you look at the overall markets, there's a lot of action happening in the small and mid caps space, and that is because it is generally believed that you could see the next round of growth in this small and mid cap sector, and this is where the growth could be. That is where the action is, and I think it's an interesting thing to look at. Now, coming to the FII and DII actions, they've been kind of neutral for the whole week. FIIs have bought shares worth about 2,100 during the week, and Indian institutions sold almost a similar amount, almost 2,100 crores. So net institutional activity has been zero. However, despite this, the market has been bullish, which is again a good thing to know. Coming to the Nifty charts, the daily Nifty charts which we track always. The previous week Friday, we saw a very sharp fall, which gave a feeling that markets could be reversing trend. We had kept our bullish stance intact, and that played out reasonably well. Monday, there was no follow-up selling in the market. There was a doji candle being formed. And then on Tuesday, the market saw a big leg up. On Wednesday, again, the market opened with a gap up. Thursday, it was a gap down, and Friday, again, a gap up. So the markets have been moving more on gap ups and gap down. But if you look at the overall trend, if you look at the 5-day moving average line, it's still positive and going higher, which indicates that the momentum is still left. Red candles and green candles are a part of any trend. What you need to see is higher highs, higher lows, and the overall trend that seems to be positive. So we believe the sentiment is bullish as long as Nifty stays above 11,200, and we could see a upper range target of about 11,630 or maybe even 11,700. So markets have been steadily going up, consolidating and going higher. If you look at the weekly charts, something's very interesting. It's been steadily going higher. Weekly has been steadily going higher. If you look at the moving average again, the 5-week moving average, Nifty is respecting that line and generally staying above it. It's also respecting the long-term trend line. As you can see, since the March lows, it has never gone below the trend line. This week formed a green candle with a higher high, higher low pattern, which again indicates bullishness. So overall, we continue to maintain our bullish stance. You always could have small corrections, but the stance till Nifty holds 11,200 seems to be bullish. Let's now look at the Bank Nifty charts. The Bank Nifty this week, after a long time, actually outperformed the Nifty. And we believe that 21,900 above Nifty is bullish. The crossover, if you see the charts here, after that big selling, there was no follow-up selling, and then you saw a large candle very much on the lines of Nifty. But what happened was the crossovers, it came to a negative crossover, but then bounced back after that, and now the uh, trend is shifted to being positive. The RSI is comfortably placed at about 55. The MACD chart is again showing a positive crossover. So all these things point to a fact that Nifty could be bullish. In fact, more bullish. The Bank Nifty could be more bullish than the Nifty itself. Please do keep in mind that the AGR judgment can make a big impact, positive or negative, for the Bank Nifty. So that's something you have to be very careful about. Whatever your positions are, please make sure that you're protected with options. If you look at the weekly Bank Nifty charts, for 10 weeks now, Nifty has been playing around this range of 22,500, 700 and 21,000. About 2,000 points range it's been playing for the last almost 2 months. And we could expect some kind of a crossover any point of time. The charts seem to be indicating a positive direction. However, we need to wait and watch. So to summarize our outlook for the week, for the coming week, we continue our bullish stand as long as Nifty trades above 11,200. If there is a negative judgment on the AGR front, on the telecom front, then it could cause a sharp fall to 10,800. But minus that, we continue to be bullish. We continue to be saying that you could be buying on dips with a stop loss, or you could hold your long positions. Market could touch 11,630. The Bank Nifty range has also moved up, and it will be bullish as long as it trades about 21,900. It's now 22. It's very close to 22,350, which is a minor resistance. If it closes above 22,350, you could go further long, and the Bank Nifty could touch the previous 23,200 levels, and from there even 24,000 levels. It has a strong support at 21,600 levels. However, as in Nifty, in fact, the AGR verdict would actually have a sharper response on the Bank Nifty than on the Nifty. But overall, assuming that there is no negative verdict on the AGR case, we expect both the Nifty and Bank Nifty to be bullish. Now let's quickly look at the option strategy. Last week, we took a cautious stand as far as the option strategy was concerned. We were bullish on the market, but option strategy, we took a cautious stand. And typically, you would possibly have lost a bit of money there. This week, we are taking a bullish stand. It's a bullish broken wing butterfly, under which you are buying one lot of Nifty of 11,400, selling two lots of 11,550, and buying one lot of 11,650. This is called a broken wing butterfly. The name itself is not important. It is the action that is important. So what would happen is here, the maximum profit that you would have if Nifty closes at 11,550 is 8,200 rupees per lot. Your maximum downside, irrespective of where the Nifty goes, is 3,000 rupees. But even if the Nifty moves up sharply up, in a typical butterfly, you would lose money. In this, you would still end up with a small profit of about 775. So this looks like a reasonably good strategy for the coming week, assuming that the markets go up. Let's now look at what can happen in the individual stocks. One chart we've liked this week is Federal Bank. Everything seems to be positive for Federal Bank. There was a golden crossover here. All the three moving averages, 5-day, 13-day and 21-day, saw a crossover here, and the market's been going up. If you look at the MACD, again it's showing a positive breakout. If you look at RSI, it's relatively well placed at 59. And the most important thing we liked about it, the breakout is accompanied by large volumes. So it seems to indicate that Federal Bank could be bullish, and we could see levels of 59.60 in the short term. Some of the other stocks that we've liked is IDFC First Bank, which is now about 30 rupees 75 paise. It could touch 32, 33 levels shortly. Max Financial is another share where charts are looking good. The current price is about 555. Keep a closing stop loss of 540 and the targets of about 600, 610. So these are a couple of other stocks, other charts that we've liked. Friends, this is it from me. If you've liked the video, if you found the video useful, please do like the video. Please do share the video with your friends. I'll see you again next week. Thank you.